Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Sorry about yesterday. I wasn't able to get a webcast out. I had a complete software meltdown that had to get reloaded and everything. So we are back up and running today, and it killed me because yesterday was such a key day in the markets with the jobs report and everything. But let's run through everything real fast, and we'll see where we are and where we're going. So jobs comes out, and it's enough to demonstrate that the taper is not coming anytime soon. And people keep talking about the taper coming in the spring, summer. I told my subscribers yesterday, and everybody can say I'm crazy, and I never say anything too outrageous, but I'm going to say this. There will be no taper until after the 2016 presidential election. It's not going to happen. The recession is going to happen on the next guy's watch, and they're committed to this strategy, and the economy is not strong enough to taper. They're going to keep putting it off and putting it off and putting it off. They'll come up with a variety of excuses, but it's something that's never really going to happen, at least not until after the presidential election in 2016. There's an outside chance it would happen after the midterms in November of 2014, but certainly not before then. Certainly not in the spring. You've got all kinds of GDP projections out there with one handles on them. One handles. That is not the environment for tapering. That is not a robust economy. And I think the market knows this. The market knows this, and it has absolutely no fear right now. Nor should it. Because this is the interest rate environment we're going to be in for a long period of time. So the ramp is on. Now, the bulls, as they do, they got a little carried away yesterday. This was a little bit much. Now, we retested it late in the day, but it still became a lower high. And what we've seen overnight is a decline back down to 36. Now, 36 is a huge level today. 36 is yesterday's low. So let's go to the daily. 36, here's a tight chart showing this ramp. Here's your 1640 right here. 1754 half. Okay, so 36 is your low. You need to trade below 36 today to start to roll this daily chart lower if you're a bear. The bulls know this, which is why 36 is being defended right now. I think we're due for a little bit of a pullback. I think that this pullback may not even get to the middle band before we begin to see a bounce. I think we're in the beginnings of another leg higher, ultimately, over the next, over the remainder of the year. You may see a pullback to the middle band. I would expect that pullback to be bought. And since we're trading above the middle band, I want to be buying dips. Now, am I short right now? Yes. I just took some off actually down at 38 half. So I'm gonna continue to trade around my short, looking for a reloading pullback. The bulls can't go anywhere from here. They're above the upper band for 1, 2, 3, 4 days. They can't go anywhere from here. The Bollinger Band is going to start to get away from them. So they have to come back down and they have to reload. And when they do that, it'll allow everybody to reload and get back in. What you want to avoid if you're a bear is getting too heavy. And you want to avoid a trade that kind of bounces around this 36 to 34 area. If we start to bounce, if we start to trade sideways as the Bollinger Band gets higher, then what typically happens, let's draw. Bollinger Band keeps getting higher. Market trades sideways. But it can't take out the 34. That move typically, almost always, concludes with a move higher to meet the band. So you have to be very concerned about that if you're really loaded up short, which is why when you have a chance to take some profits like this morning, take some profits. Okay? Trade around it. Now, if the bottom falls out, hey, great, awesome. But if it doesn't, then you're still trading around a core short. And I would suggest if the market starts to trade sideways like I've depicted here, you may want to think about either buying some calls to hedge it or starting to think about getting a little bit long. But if 34 becomes a floor, then why wouldn't you want to be long? If they can't crack 34, then we're going higher. So just be mindful of that. Now, if we break down through 34, it opens up basically the 1717 area. This middle band is going to rise to meet price, and I think you're going to have some kind of a confluence there around 1710 to 1720, depending on where the middle band is. So just a few things to look out for over the next couple of days. So everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Subscribe to the website. Come check out the chat room. Don't trade this stuff by yourself. And I will be back tomorrow morning with another webcast. Trade 'em well, everybody.